Time for your CNBC Edge. Two takes on stocks in '09. One advisor who views the current market as a rising tide lifting all boats. Another who has some energy and consumer picks for the market. Joining us from Reno, Nevada, Mark Pato, U.S. market strategist with Cantor Fitzgerald, and in the City of Angels, Rafael Resendes, manager of the Toreador Large Cap Fund, co-founder of Applied Finance Group. I'll start with Mark. What do you think?
Well, right here, we're already seeing a lot of the January effect. It came in a little bit early. It's important to see the January effect because if investors are going to go out and buy small cap names that are less liquid, don't have dividends, probably don't even have profits, it shows a commitment to some sort of a growth or at least some risk tolerance here. We haven't seen that in quite a while. So the outperformance by the Russell 2000 over the last 2-3 weeks is very important. I think that's really giving us some long-term expectations that things are turning around. Not the economy, but the markets.
Rafael, you agree?
We have a different take. What we look at here is we see a change from a momentum-driven market to more of a valuation-driven market over the last 6 weeks. And we think there are a number of names that are really well positioned. Obviously, in the large cap space where we look at, we saw Family Dollar have a strong quarter today. A name that is very strong relative is Kohl's. We think you're able to buy Kohl's priced in so that the company is going to shrink its top line 5% a year over the next 5 years, whereas you're paying for positive growth for Family Dollar here. We like some of the trades that we see longer term to invest in and secure superior longer term gains here.
All right, so how do we invest at this moment? I know you each have interesting, different ideas. Mark, you first. You're saying you're going to play this pipeline problem, as we describe it, in Russia.
Yeah, I think the near term, that this is an opportunity for a bit of a play to get the natural gas stocks between now and the next month. If anything goes wrong with the whole plan for Russia to negotiate with the Ukraine, you can get a nice little spike there. Overall, the market will probably get a pullback with the earnings. Obviously, Intel this morning, kind of setting the stage for that. So we're looking for a little bit of a pullback and a workout through the first quarter, but then improvement after that.
All right, and what about you, Rafael? You have a different play. I know you're not looking at energy directly, but actually some consumer stocks right now.
Sure, we talked a little bit about Kohl's. We like CVS. Great opportunities in terms of what they're doing from a cost savings perspective in the healthcare area. Freeport-McMoRan is a company that's just been decimated. We think it provides some longer term opportunities, particularly as the infrastructure play with the new government administration, the new administration coming into play this coming year. So we think right in those areas there, we have 3 great names for longer-term investors.
When you say Freeport, obviously it's copper and gold. Infrastructure
Correct.
would make me think copper, but does that also mean you are a bull on gold?
Not so much a bull on gold. We think to some degree that's kind of an added bonus to the company with potentially a weakening dollar given how much stimulus is being dumped into the marketplace today. But really what we're looking at with Freeport is more the copper play longer term here.
All right, for the record, you like CVS, Valero Energy, and Freeport-McMoRan. Thank you very much, gentlemen. Mark Pato and Rafael Resendes. Up next.